All right, you are tuned in to the marketplace on Smooth 98.1, 19 minutes gone past five. And what a time to be here having this great conversation. And if you're just tuning and wondering what exactly we're going to be talking about on the marketplace today, well, we'll be understanding what venture capital funding is, but we'll be focusing on Africa. And my guest this evening joining me virtually is Miracle Nnaji. He's an author at mentor at TVC Labs. Good evening and welcome, Miracle.
Good evening, Joy. Thank you very much for having me on your show.
You're very welcome. All right, Lagos, you as well can join in. Chime in, share your thoughts this evening as we will be delving into, focusing and understanding what venture capital is all about. And hey, trying to make headway and makes more sense rather of what it is and what it's not. So we don't have any confusions going into, marketplace, trying to understand it, breaking it down. Well, Miracle is here to break it all down. You know what?
Yeah, happy to do
It's
that.
yeah, that is, talking about it in the easiest and clearest terms for, as they say, a 5-year-old to understand. So
Yeah.
come through and you can also share your thoughts as well on WhatsApp. It is 0809 4440 981. Okay, get into the conversation. First off, let's even start off with venture capital. I know what venture capital is. It's, well, at least to my understanding, it is money that is invested in startups with growth. Well, not just growth, with high growth potential. But I'd like you to expatiate on it more, break it down, and help us understand it better.
Okay, great, Joy. So I'm just gonna go first to give more like a basic definition of what venture capital is, a basic
Please
explanation of what
do.
venture
Please
capital
do.
is, and then I can set some context. So at a very basic level, venture capital is a kind of financing provided
Okay.
to early stage young businesses that are
Mhm.
bringing unproven innovations to the market, but with high growth potentials when they
Mm.
eventually succeed. Now, in
Right.
exchange for providing this capital to these businesses, an equity stake, that's an ownership stake, is gotten in the business. Now,
Mm.
beyond just providing the company with the young startup with financing, a critical differentiating factor about venture capital is also the value creation support that the provider of the capital tend to give to these startups. That beyond just providing capital, they also support them in terms of giving them access to certain network resources, mentorship,
Mm.
all in a bid to help them overcome those risks of failure and eventually succeed. So in summary, venture capital is you providing financing to a very, very young company that is bringing
Okay.
something innovative in the market. They're not even sure whether they are going to succeed or fail. But when they
Right.
eventually succeed, I mean, it's the growth
Hey.
potential is enormous, right? And beyond just
Mm.
giving them capital, you have to support them. You have to roll up your sleeve. You use your experience, you use your expertise to support them to grow and succeed. So in a very basic form, like you said, like a young person, like a child is going to understand it. That's what venture
Mm.
capital is all about.
Yes, that's what we get to do here. Try to break it down as easy as possible for, even a 5-year-old to understand. Yeah, and eventually share that information to people around and like, okay, that's what I learned when I was listening to the marketplace. So thank you so much for
Uh-huh.
breaking it down and making it more easily
My
understandable.
pleasure.
All right. So now let's even get into something that usually sometimes confuses some people, and that is how does one now differentiate between venture capital and private equity? Because uh, that sometimes, there's some there's some
Confusion, right?
confusion there.
I
Where okay,
understand.
so I'm trying to get private equity, and then someone now says, okay, no, you need to get into venture capitalism and all
Mhm.
that. So break it all
Okay.
down.
Makes a lot of sense. So I'm just going to tell a story first. So I remember in my
Okay,
junior
okay,
class, that was in JS2.
right.
business studies, I cannot forget. Her name is Madam Nike.
I'm not a
So
fan.
yeah, her name is Madam Nike. So
Okay.
she introduced us to a topic on business organizations, right?
Oh,
And talked
okay.
about sole proprietorship, talked about
Oh,
limited
yeah.
liability companies, talked about
Mm.
public limited
Public
liability
limited.
companies.
Yes.
Exactly. So that was where I first learned the difference between two categories of companies, one the
Hmm.
public and the one
And the
private.
one
So
private.
the differentiating factor between the both of them is that public companies are listed on like a stock exchange, and they can
Right.
probably raise money. They can raise money from the public market, but
True.
private companies are not listed. Right. Now, that class of organizations that are not listed, the private companies, they now
Hmm.
turn to private sources of capital to raise money. And that's where we now carved out the term private equity. Right. So
Okay.
private equity in its broad sense, in its broad family, has to do with investment into private companies, investment vehicles that are set up to provide financing to private companies, right?
Right.
But now, when we now look at traditional private equity and then
Hmm.
venture capital, the line tends to diverge when we now look at the stage or the maturity level of the private companies that they invest into, and then the
Okay.
investment approach. So the common ground between
Hmm.
private equity and then venture capital is that they both provide capital to private companies that are not listed. But the
Right.
differentiating factor between the both of them now is now the maturity level of the
Mm.
companies they are investing into. Now, when we look at venture capital, like I mentioned in my definition, that
Hmm.
venture capital tends to provide financing to young, early stage companies that are bringing in an innovative solution into the market. Now, because currently technology drives most of the innovation, that's why we find most of the startups as technology companies. Right. Now,
Mm.
because they are young, because they're trying to try out their
Grow.
hands on certain things that have not been proven, the risk of
Right.
failure for them is very high. About 90%
Mm.
of startups fail, right? So the risk of failure for them failing is very high. And
Hmm.
also because in their early stage, they're probably not even generating revenue. They can't turn to
Okay.
a bank to raise money, right? So venture capital
Mm.
bridges that gap by being that investment class that has the risk appetite to support these risky businesses that are bringing in something new into the market. So in terms
Hmm.
of maturity level, they target younger companies. Now, also, when we look at their investment approach, remember I mentioned that venture capital takes an ownership stake in the business, right?
True.
But venture
True.
capital tends to take minority ownership stake, usually less than 30% of the business, meaning that the founders of the business tend to run the show, they call the shots. However, like I mentioned, they provide mentorship, guiding and cheering them on to succeed. Then,
True.
in terms of the investment instrument, most venture capital invest through equity, right? Because of the risk factor involved. Most debt investments cannot really do equity, they cannot do those early stage startups because of the risk
Hmm.
involved. However, due to funding scarcity now, we are now seeing more mature startups raising debt funding, but we'll talk about that later. Then we will now look at private equity. So to summarize that part of venture capital, maturity level is young companies.
Determine.
When it
Okay.
exactly when it comes to the investment approach, minority stake, and then they mostly invest through equity instruments. When we now look at private equity tends to target more mature companies, right?
Mm.
Companies that
Mm.
have been generating revenue, that have been
For a
operational for a
time.
while.
Yeah.
Exactly. That have been operational for a while. But because maybe they now need some sort of capital injection in
Invest.
order to
Okay.
grow, right?
Hmm.
So we call those kind of private equity, they provide growth equity capital, right?
Right.
Now, that's in terms of the maturity level of the company. But in terms of the investment approach, unlike venture capital that takes up minority stake, private equity
Right.
tends to take up majority
More.
ownership stake, more than 50%. And you guess what? Guess why? Because
Why is
private
that?
equity, the way it functions is that they want to come in, change the management, implement all the necessary changes that they need to implement, and ensure that the business is able to grow, thrive, and succeed. And then they turn around the business and then sell it to another financial buyer. Right. So in order to give
Right.
them that sort of control to do what they want to do with the business, they seek majority ownership stake. Now, in terms of the investment instrument, unlike unlike venture capital that is more concentrated on equity, you see
Right.
that private equity invests through a diverse sort of instrument. So you see them investing using equity, investing through mezzanine, investing through, oh, by the way, what mezzanine means, a kind of debt funding that can convert into equity in the future dates, right? Then they also invest through senior debt. So to summarize the differences between venture capital and private equity is mainly around the maturity level of the company they invest into and then the investment approach.
All right. That's actually very interesting. I now that you've broken it down, makes it even more interesting. So
Okay.
I could just own a company without and not dictate how things want to go without having to worry my head, more or less. But at the same
Exactly.
time, it means that I have to be pumping all the right injecting rather, let me not say pump. I need to be injecting the right funds or the right well, yeah, funds more or less, because it's the funds that will make this investment
Exactly.
actually worthwhile for me or for whoever it is I'm trying to also market this investments to.
Awesome.
Interesting,
Spot
interesting
on.
stuff there. Great one indeed. And
Yeah.
don't forget that you can be a part of the marketplace. You have questions you want to ask, come through and ask your questions. Yeah, send them to me on WhatsApp 0809 4440 981. Take it a bit slower in case you just tuned in and want to share your thoughts. It is 0809 4440 981. Share your thoughts on how if you have questions regarding venture capitalism and all that, come through. Well, my guest with me, Miracle Nnaji, is here to share all that insight. But let's take this quick breather. On the other side, we will definitely be talking more about hey, what it is to get into venture capitalism outside of Nigeria, or at least we'll be focusing on Africa and be touching on some more details, but we'll take that conversation on the other side of the screen reader. Lagos, don't go nowhere.
Awesome.
Like I said, quick one. It's gonna be a
Okay.
very quick breather, and then we're back. It's even great the way you've even broken it down, for anyone who's, yeah, it makes it
Yeah.
easier to understand.
Makes it
Like I
easier
said,
to understand too.
that's the whole idea. Make it easily understandable, but at the same time, you want to pass the right message.
Pass
That's
the
what
right message. Yeah.
yes. Pass the right message will make it easily understandable. All right, going back in.
Awesome.
All right. Yes, you're welcome to the second half of Marketplace this Monday evening, and you can be a part of Marketplace. Share your thoughts with me on WhatsApp 0809 4440 981. It's the number to share your thoughts. And my guest this evening is Miracle Nnaji, and he's been sharing insights, especially for those who are, trying to test the marketplace and, what do I need to get my hands into, especially if I'm looking at investing into stuff out, companies outside of Nigeria, looking at Africa. Well, he's giving us all that first class and insight into it and how we can go about it. Okay. Well, Miracle, I want you to even tell us more about okay, someone who's getting into this field. What skills do they need to have, or is it just going online, doing your quick research and say, okay, so Miracle has told me this. I'm equipped. I could just go in and I don't need any other expertise.
Right. Okay, that makes sense. So first, before if we want to talk about the different skills and expertise, we just need to understand the different stakeholders that gets to play, right? So that would help give better insights into things. So now when it comes to the kind of investment vehicles that are set up to invest into startups, right? So
Mm,
just to bring everybody to a common place, we call them venture capital funds. Let me use that word, venture capital funds, right? So
mm,
the venture capital fund is set up for the purpose of investing into startups. Now, the way venture capital fund works is that it raises money from investors, so people that
mm-hmm,
have capital lying around that they don't want to use it at the moment, let's say
mm-hmm.
ultra high net worth individuals or some institutions. Now they raise money from this class of investors and then invest it into startups. So based on having said that context, let me
Mm-hmm.
consider two categories of persons. So people that are
Right.
venture capital professionals, and then
Mm-hmm.
people that are investors into into venture capital funds, right? Now, starting with venture capital professionals. So these are the guys that have investment experience, and they handle that bit of looking for the right investment opportunities and then
Okay.
reviewing those investment opportunities to ensure that this is the right investment we should be making in the first place. And
Mm-hmm.
then after investment, support them, like I mentioned, value creation in areas where they are struggling, provide
Mm-hmm.
advisory to them, help them raise further funding, connect them to networks, right? So for these VC professionals, you find them across different levels in a venture capital fund. So we have the people we call the general partners, we have the people at the associate level, we have the people at the analyst level. So depending on the level that you find yourself, but in terms of the skills that you need to function at this level, firstly is that you need to have some sort of investment. You need to have investment experience. So what does it mean to be able to look for startups, right? What does it mean to be able to review the startups? What are you looking at when you are reviewing these companies for potential investment? So you need to have those skill sets. Then you need to have some finance understanding, because part of
Okay.
what you're going to be looking at when you're considering a startup for investment is
Mm-hmm.
what is the financial prospects of this particular company, and their skills
Right.
to doing that, right? So you
Mm,
need to equip yourself with this background. But I think that to a large extent, the soft part, the soft skills matters a lot. Being able
mm.
to build networks with potential founders that are doing something amazing, right?
All right.
Those are very, very critical skills that are needed. Then on the investor side,
Okay.
remember I mentioned that as an
Mm,
investor, what you are
right.
doing is that you are not involved in looking for these startups to invest. The VC professionals handles that. But you, the investor, what you do is to provide the capital, fold your
Okay.
hands and wait for them to return the capital to you after about 5 to 7 years, depending on the
Mm-hmm.
fund life, right? Now, as an investor, what you need to know better is more around portfolio construction, right?
Mm,
What sort of risk and returns are you looking at for your portfolio? Those are very important skills, because different investment opportunities comes with different risk levels. That
mm.
when you are investing in government bonds, for instance, those are low risk investments. Unlike when you are investing into venture
Oh,
capital, those are very risky
right.
investment, because most of these startups could fail and you not get your money back. And then they are
Mm,
not as liquid as bonds, because you have to wait like 5 years, 7 years, even 10 years before you get your money back. So understanding what your risk return appetite looks like is a fundamental skill that you need to have. And understanding how that investment into venture capital will help optimize your portfolio is very key. And also the soft
mm.
part as well, being able to find the fund managers that you want to work with to make investments. So in summary, I think investment and finance skills are very much needed, but the soft skills are also needed as well.
All right. Thank you so much. So, at every point in time, you need to know what works for you, and you need to ask the right questions so you wouldn't, make your investments or think that you have everything that you need and then fail when you're just starting out. But talking about something that is of interest to me is startups. Okay. And we
Mhm.
saw that the startups funding in Africa has actually fallen by 57% year on year to about I know about 780 million in half year of 2024, as opposed
Mhm.
to what we used to have before. Also, it's now 31% compared to the second half of 2023. What would you attribute to this drop? Is it something we're not doing right, or is it as a
Yeah.
result of, as everybody says, well, there's no what's the there's no dollar in the markets because
So,
everybody keeps pointing
yeah.
at the dollar, and It just makes
Yeah.
me wonder, is it really everything that's affected by the
Yes.
by that
So,
currency?
so Joy, I think it has been quite a sad one for us in the space that in 2022, let's say 2021, 2022, our hopes went up like this because funding was just abundant, right? But
Mm,
since 2023, quarter on quarter, each half year, the amount of funding that is raised by startups keeps reducing and reducing. Now,
mm,
so from 2023, in terms of the number of funding raised, it reduced. And then by the beginning of this year, a lot of experts also predicted that it's going to decline by the time we start seeing the results for the year, and that actually materialized. But to
okay.
answer your question, I think there are numerous factors. There are not a number of factors that we can attribute to the fall in funding. But for the
Okay.
sake of time, I would limit it to three. I know. So
Right.
for the sake of time, I'll limit my conversation to three aspects. So one
Mm,
being the known macroeconomic challenges, the second aspect being a drop in the number of unique investors, and then the
mhm.
third aspect is in terms of decline in mega rounds. And I'm going to try to explain each of them. Now, for the
Please do.
macroeconomic factors, there are three main aspects that I see that has been a huge factor. One of them is the hike in interest rates. So, Joy, what happens when there is an interest rate hike is that most capital allocators, most investors providing capital to startups, they find
Right.
it more attractive to invest into low risk investment because the returns are quite good enough,
Minimum.
right? So
Okay.
their risk appetite drops when the interest rate goes up. And that is what we started seeing as from 2022 when interest rates went up. So for venture
Oh,
capital funds,
okay.
they could not raise money to now invest into startups.
In
So for
that
that
business.
reason, many startups could not raise at that within this period, and that's exactly
Okay.
what played out. Then the second aspect is in terms of inflation and then devaluation of currency, and these bites hard so much in Africa, whereby
Mhm.
inflation rate is really going up. I mean, look at Nigeria, how inflation has really gone up, and
Oh,
then when
it's
we also
affected
look
a
at
lot
the
of things.
exactly. When we also look at the
Mm,
devaluation of the currency as of June last year, the currency lost about 33%. And this is very challenging for startups because they are not able to report certain milestones and certain results that they need to
right.
go back to investors to raise
To
further
tell them,
capital.
okay, so this is what I've done with the first one you've given,
Exactly.
and I need this to progress. But
Exactly, spot on. Because they can
mm,
grow in naira, but you see that that growth is not in real terms. It's more or less price
mm,
increases. And then when they
right.
convert from naira to dollar, it's as if they
It
didn't
now
do
seems like
anything.
they didn't do
Some
anything.
portfolio companies that I looked at earlier this year, they lost about 40% of their revenue value when they convert to dollars, right? So
Okay.
that really affects affected startups. Then
Okay.
that's for the macroeconomic factors, really. And then for the second aspect about unique investors. So you see that H1, when we look at H1 2022, the number
Hmm.
of unique investors in Africa went up to as much as 700 when we look at the report by Big Deal, right? It went to up to about 700. Now, by
Okay.
H1 2023, that declined to about 400. Right. And by
Okay.
H1 2024, that declined further to about 300 unique investors. Now, the
Hmm.
more these investors are declining, the less available capital is being made,
Is
right?
a
The less available capital that startups have. And this bites hard so much in Africa because majority of the investors that funded startups were foreign investors,
okay,
right?
but let me even come in here because you
Okay.
said you've said that in some part of Africa, well, investors have sort of lost interest, but there's also the big four that I would where we also are part of that have also benefited from this funding. And I'm talking of Kenya, I'm talking of
Mhm.
Egypt, South Africa. Yes, we are the fourth one in this mix.
Yeah.
But um, talking about the funding that they've received, what do you make of the 79% that has actually gone into this country? Some have made it, made headway with theirs.
Mhm.
I know that there are some companies, I'm not going to be mentioning names, especially in Kenya, that has actually made use of this funding. And hey, you see them, they're even here now in Nigeria and making headway.
Mhm.
So, what is it that we've not done right that's made it difficult to go back to these investors and tell them, okay, yeah, we started out on the right note. I know
Mhm.
inflation, but inflation also affects other part of Africa,
Yeah.
right? But
Right.
we're still grappling with straws. We're still trying to get headway with this. What is
Mhm.
the thing that is making us still seem somewhat backwards?
Okay, very, very salient point you raised. But the thing is, whilst I think that some of the investors pulled back because of some of the tough macroeconomic indicators that they were seeing, and then
Okay.
some news about shutdowns of some startups shutting down. Now, I also
Yes.
think that there's also another side to their pulling back, in the sense
Okay.
that most of them that invested at that particular point in time were first time in, it was their first time investing in Africa. Right. So
Mm.
it's more or less a wait and see strategy that they'll be like, oh, okay, let me make this first investment and see how
Okay.
that plays out. Right.
And then
Then
before I
I
know,
can
if I
see
want
whether
to
I want to
fund
double
more,
down. Exactly. So the fact that they dropped is not entirely that they don't see prospect, that the macroeconomics are just too bad, because it didn't affect Africa alone. It affected
yeah.
the whole world. Right.
Okay.
But why we noticed it more is that bulk of our capital come from foreign guys. Now, but
Mm.
like you mentioned, within this period where we experienced boom, and even with the decline, there has
Mm-hmm.
been some markets in Africa that has been registering huge growth.
Huge
And we talk
growth.
about Nigeria, we talk about South Africa, Kenya, and then Egypt.
Egypt.
Now, it's quite interesting that these four countries over the years has cemented their position as the top giants when it comes to startup investment in Africa. That
Mm.
over, based off on H1, it's like 79% went to these four countries. Now, when we
Mm-hmm.
look at the historical average, that is even a drop, because historically the average is about 82% of all funding goes to these four
Right.
countries. But when we now ask the question, what is it that these four countries actually did right, or what are some of the pros of these countries that makes them to attract this much funding? And some of them are tied to certain demographic factors, and also
Mm-hmm.
tied to certain macroeconomic factors, that apart from Kenya, that all the other three are they have the largest population in their region. So
Right.
Nigeria in West Africa, South
Yes.
Africa in southern, Egypt in the
Egypt
northern
in
part.
no,
And of course, with that demography, they have more consumer, a larger consumer market. And
which is
then
true.
also together, all four of these countries account for 47% of Africa's GDP.
Mm.
Right. So these favorable macroeconomic factors kind of influences why funding streams into these different countries. But another
Okay.
one that I consider very important is in terms of the concentration of innovation hubs. So Joy,
Mm.
venture capital flows in the direction of innovation. So the only
Right.
reason why venture capital exists in a space is that there are innovation to back. Right. So once they are not innovative
Innovation to
ideas
back
to
them.
back, you don't find venture capital within that space. And when we
Right.
consider it from this perspective, the big four African markets, they command
Mm-hmm.
44% of all innovation hubs in Africa. That about when you look
Hey.
at Brighter's Bridge, about 633 innovation hubs in Africa, and 44% of those of them are in the big four countries. So
Right.
more like a concentration of innovative activities within these countries drives the sort of funding that they are
That
seeing.
they.
And with
Mm.
that, they have been able to develop certain sectors. And with
Mm.
that, they've been able to develop certain sectors, especially fintech, that has been like the sector that has received the most funding since we started tracking it.
I
Yeah.
agree
So
with you.
summarily, I think that for investors, it's not just about the tough macroeconomic factor that is pulling them back, but it's more around their investment strategy of just trying to invest, wait and see how that plays out, to now decide whether to double down or not. And then in terms of regional activities, the four big African markets have cemented their place, mostly because of favorable macroeconomic factors, and then high
Right.
innovation activities going on in these markets.
Mm. You know what? So much information to share, but you know how they say time isn't your friend when you
I
know have so
understand.
much
I
to
understand.
put out there. But how can the listener reach out to you on your social media handle? They have questions, they want to, figure out where and how they can actually be adept with all this information. How can they reach
Awesome.
out to
So
you?
you can follow me on LinkedIn. I do make periodic posts, and on LinkedIn, Miracle Nnaji, and then on X, Miracle Nnaji 2. That's my handle on X. And then I'm not so very active on Instagram, but if you want to try your luck, you can try. That's Kene_Nnaji. But I'm most active on LinkedIn and then Twitter.
X.
Yeah, and X, yes, exactly. And then you can shoot me an email, miraclennaji101@gmail.com. I'm happy to address your questions.
Address our questions. All right, thank you so much, Miracle. It's been an interesting session today. And I'm sure that when next we reach out to you to come break things down further, you'll be available to share all that insight.
Absolutely, my pleasure.
Great stuff. Do have yourself a pleasant evening ahead of you. And yes, it's been an interesting session today on the marketplace. As always, it will make a return next week, Monday. Yes, at 5:15 is where we get to start off. And so much more information lined up for you, not to touch the dial. Still tuned. Stay tuned to Smooth 98.1.
All right, that was great.
Yes, very interesting information you shared this evening.
Thank you so much, Joy.